Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, February 26th, 2021. And our top stories today, issues that gig workers are having with filing their taxes this year and the impact to retirement savings. Well, joining me now to discuss this and a lot more is Caroline Bruckner. She is Managing Director of the COGOD Tax Policy Center at American University. Caroline, great to see you. Thanks so much for joining us on the program this morning.
Thanks so much for having me back. There's a lot going on.
There is a lot going on, and you know it's tax season. And I don't take this as a slight, but when I think of taxes, I think of Caroline Bruckner. And I wanted to I know you wanted to talk about the impact of taxes and issues for our fellow gig workers out there.
Yeah, absolutely. Tax season, particularly this year, is going to be a lot different than it has been in past years. There were a number of tax changes that were included as part of emergency economic relief that Congress put into the CARES Act back in March. And then they refunded a number of those provisions and programs like the PPP in December. And now with the Biden American Rescue Plan, there's even more funding and changes that are going to impact workers moving forward.
And you know, kind of look reading up on this topic, and I know you've got a lot more detail than I do. The amount of gig workers, we're talking about tens of millions of Americans. And I think the last time you were on, you talked about this real steep growth in gig workers. So there are a lot of people who need to be tuning in and listening right now to what we're about to talk about.
Right. So just to give you a little bit of background, when the economy contracts and people lose their full-time jobs, what do to make up income shortfalls? They do side gigs or side hustles. And many people do gig work with online platforms. And we see the data coming from the private sector showing that the one area where there was job growth, not just job recovery from jobs that were lost in the spring and recovered since then, but actual job growth has been in this occasional gig worker sector. That's actually increased by 5.3%. And we know this from a survey that was put out in December by MBO Partners. What that means is there are hundreds of thousands of workers who suddenly turned to gig work, perhaps for the first time in many instances last year, to make up for income shortfalls.
Yeah, and so there, when you, to your point, if you're self-employed, you're a gig worker, there are things you really need to be thinking about, Caroline, in terms of filing your taxes. Very different than if you're getting a W-2 from your employer, you're making those retirement contributions, paying for those Social Security benefits, et cetera, right?
So yeah, big picture, if you were a self-employed worker for the first time last year, there are two things that apply to every single self-employed worker that you really want to keep your eye on. Number one, it's a pay-as-you-go system. So if you're going to be expected to owe more than $1,000 in tax, you need to be paying or have paid through all of 2020 quarterly estimated payments. Number two, self-employment tax. So that is the equivalent of payroll taxes. So your Social Security and Medicare on your earnings of $400 or more, it's that 15.3% Social Security Medicare tax that attaches to self-employment earnings. Most gig workers who have only ever been W-2 wage earners are unfamiliar with these filing requirements, and this tends to trip them up. But what's really unique this year is that as part of the CARES Act, Congress funded an emergency pandemic unemployment assistance program, so unemployment insurance that was targeted specifically for gig workers, unemployed workers, and part-time workers. These kinds of emergency unemployment insurance programs have never been done at the national level in a circumstance comparable to what we saw with the pandemic. What that means is that gig workers, existing gig workers, could for the first time file for unemployment insurance from their state agencies, because historically they aren't eligible under existing state unemployment insurance programs. That means that they got unemployment insurance and it is in fact taxable.
So Caroline, they're going to get a 1099. Is it a 1099-G? Am I right on that?
It's the 1099-G.
Okay, so that's, go ahead, I'm sorry.
Oh, that's the information reporting form that they're going to get from their state unemployment insurance agency. But here is the real wrinkle of what happened. New data just came out from the Century Foundation earlier this month that shows that less than 40% of state unemployment agencies did any kind of withholding on unemployment insurance that they paid out during 2020. That is a really big deal. Unemployment insurance is in fact taxable unless a state passes emergency legislation saying that it's not taxable. But at the same time, so many of these state agencies didn't do appropriate withholding. What does that mean? You have an unemployed gig worker that took unemployment insurance and is now rushing to file their taxes in the hopes that they qualify for extra emergency or refundable tax credits. And they walk away from filing realizing that they actually owe taxes on their unemployment insurance.
And that could be a huge, I mean, just listening to you talk about this and me processing it, this could be a big tax bill, especially if you have not had state withholding done. And federal withholding, that potentially really is additive to what you might be expecting to receive a refund or may not be expecting to pay as much. You could really be on the hook for a large sum of money.
I talked to a worker last week who was furloughed for 4 weeks last year and filed unemployment insurance claims for those 4 weeks. No withholding on the unemployment insurance money that she received. And, I had to break the news to her. You're going to have to pay taxes just like you would have had that money been paid in your wages.
Caroline, where do we go to get information? Is it the IRS site? Is it the COGA Tax Policy Center site, Intuit? I mean, where can you go to get the information? If you're self-preparing, if you've got a CPA, he or she should probably have that information. But where do we go to get the latest information from the Internal Revenue Service?
IRS.gov. IRS.gov is all over this issue and is really working to get out information on the taxability of unemployment insurance for individuals. However, keep in mind, different states might pass legislation that exempts unemployment insurance from state income tax. So you also want to know if in your state it's a problem for you. Now, one thing that you should also be aware of with your unemployment insurance, if you filed and received an unemployment insurance, regardless of whether or not you're a W-2 or a gig worker, that unemployment insurance is not subject to payroll taxes. So that means that you had a break in your contributions to Social Security and Medicare. And why does that matter? Well, so many people primarily rely on Social Security in their retirement, in addition to what other investments that they have.
That's a big deal, and I hope people are listening and re-listening to that. You want to make sure that you consult the IRS website and a tax professional if that's how you choose to prepare your taxes. Caroline, I want to go to a quick break. When we come back, we'll talk to Caroline about the potential impact to retirement savings, because there could be an impact as well. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. and we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Caroline Bruckner of Kogod Tax Policy Center. Caroline, thanks so much for staying with us this morning.
Absolutely. Thanks for having me.
Absolutely. Look, this is important. I hope people are taking notes. I know I'm going to be writing a lot of things down and talking to my CPA as soon as I get off the call with you. Let's before we get to retirement savings, and I did tease that, and we are going to get to that. Let's talk about this Yarmouth Amendment that I know it was released this week. It's a big deal. You want to tell the listeners and audience about that. Go ahead.
Well, it's an important change for gig workers in how they receive 1099s and information reporting. And it popped up earlier this week as part of a manager's amendment to the American Rescue Plan, which is the big COVID relief bill that's making its way through the House of Representatives this week. It will be voted on and sent over to the Senate likely on Friday. This amendment, if included, which it looks like it will be, would change the reporting requirement thresholds for online gig workers. So Uber drivers, Etsy drivers, anyone that works with an online platform that connects them with customers and also importantly processes payment. Under these rule changes, they would now get a 1099. And that hasn't been the case because under current law, you have to first have $20,000 in payments and 200 transactions to meet the information reporting thresholds. So what this rule change would do was just align it at the $600 NEC filing threshold. So it's just making the rules uniform, and it wouldn't be effective until after 2021. But that's an important rules change that really impacts gig economy workers.
Yeah, absolutely. And so you want to be, if you are a gig worker and you continue to be a gig worker, okay, this may be your first year filing taxes as a gig worker, but there are details that you have to follow. And this Yarmouth Amendment, when it passes, will have an impact in how you keep track of what taxes you need to pay. So I think it makes sense. I think this is something that a lot of people who are new to gig work, they're going to be learning a lot, Caroline, through this tax season, but also there are going to be some little bumps along the way. We talked earlier, last segment, about the additional state and perhaps federal tax, depending on what happens. But there's going to be could be some hard lessons learned here, and I think this is another example of that.
I think that that's true. Now, keep in mind, it still has to make its way through the Senate, and there's absolutely lots of political and legislative barriers that could mean that this doesn't become law. And one thing that you mentioned that I think it's important to reassure your viewers about is the first year that you file taxes as an independent contractor or self-employed worker is the worst. And in this year, when there have been so many tax changes, for example, for the first time, you are able to both claim the standard deduction and take an up to $300 cash deduction for charitable contributions that you made. There are just so many different changes that were put in to the tax law in order to help people recover the economic recovery payments, the paid leave and sick leave credits that are available to independent contractors and workers in general. it's a particularly confusing year to be a first-time self-employed or independent contract worker, tax filer. But, I tend to see in my research that the first year is the worst, and then people get acclimated and they get a system and they get a record-keeping system that helps them the next year and going forward.
Yeah, you bring up a great point, and I just want to reiterate that. I mean, it's always the first time. Sometimes change is hard. We're all going through a lot of change, especially with this pandemic, and getting acclimated is going to be challenging, but perseverance, continuing to move forward is going to be the way to greater success, and learning as you go. Caroline, I want to use the remaining bit of the segment, and you actually touched on it. I want to talk about retirement a little bit. I kind of teased that going into the second segment. And let's start with the Social Security, because a lot of us, if you're an employee, W-2 employee, you've been paying in the Social Security, your employer's been paying in the Social Security as well. You talked about this already, but let's just reiterate. It's important to make those Social Security contributions because A, it's compulsory, it's mandatory, you have to do that, but also this impacts your retirement planning and your potential financial future.
Absolutely. What do we know is that Social Security is foundational for people's retirement income security, particularly for women. And we also know that the tax compliance around gig workers, independent contractors, and self-employed workers is particularly low when it comes to paying self-employment tax. And this is reiterated in IRS tax gap studies, which look at the amount of taxes that are imposed versus the amount that are actually collected. That gap is hundreds of billions of dollars, and a huge portion of it is attributable to the failure of independent contractors, self-employed workers, and gig workers to properly report their income and to remit self-employment tax on the Schedule SE that you file together with your Form 1040. Now, people, sorry to cut you off, but
no, go ahead.
People really, really don't understand the consequences of failure to track this income and pay the self-employment tax on it. It's not just that you're facing potential penalty or audit exposure when you underreport your income and don't pay your self-employment tax, but you're hurting yourself because you're not getting credited for all of your earnings for Social Security purposes down the line. And this goes back to the foundational point of Social Security being the first place people look to for retirement income security.
Yeah, let's just, we got about a minute and a half, 2 minutes left. And we've talked about, you and I have talked about this and others have talked about it. A lot of gig workers do not have access to a 401k or 401k-like plan. So this may be the first year that because they're a gig worker, they're not going to be participating in a 401k as well, or a 403b or a 457b governmental plan. So they need to really look into this once they get past this filing process, right? I mean, there are IRAs, there are SEPs, there are options available today and potentially in the future for people who want to save for their own retirement through discretionary contributions.
The number one problem people have in saving for retirement is cash flow, particularly low income workers, in addition to access to retirement plans. Social Security is designed to address that issue and to really encourage people to pay self-employment tax. So at least there's a minimum, a base minimum. Now, Social Security was never designed to be the entirety of someone's retirement income. It is in fact designed to be just one leg of that three-legged stool of savings and, independent retirement plans that people have. Now, what has happened with the pandemic is that so many employers have paused on making their contributions to employees' retirement plans. I know that's been the case for me and a number of my colleagues. That means that whatever side hustles people have, they need to be doubly sure that they are also paying self-employment tax on any income that they're earning outside of their traditional W-2, particularly if they are experiencing pauses or limited contributions from their employers as a backup means of ensuring at least some retirement security contributions in 2020.
Yeah, I think this topic alone deserves another hour. We don't have another hour. But Caroline, I'm going to invite you back again when it makes sense for your schedule. Let's continue this conversation. Caroline Bruckner, always a pleasure to see you. Always a pleasure to chat about taxes and retirement and savings and being a gig worker. And we look forward to having you back on the program again very soon.
Thanks so much.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for our weekly retrospective show, BRN Weekly. We've got a very special guest. We'll take a look at some of our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.